Tom Lee recently just did an interview calling for more strength in stocks, mainly because of supply chains getting better and reduced inflation in the second half of 2022. Let's start with our resident CFO, Justin. Is Tom Lee correct on his analysis?
Yeah, I mean, he's a macro guy, former strategist for JP Morgan Chase, and he's super smart. And he's been right during this like COVID pandemic specifically when I've been following him. I remember following him very lightly, before COVID, but he really kind of came to the fore here, in the past 2-3 years. And I really hope he's right. I'm not a macro guy. I'm like a bottoms up guy, like reading through 10Ks and doing like DCFs and stuff. So completely opposite ends of the investing spectrum. So I look to him for the lead. And he's saying just to summarize, so you don't have to go watch the whole clip. He's basically saying that the market's been weak for the past couple of weeks because there's been a tax bill. Like the government's extracted almost like $1 trillion or something, if I remember correctly, out of the economy. Right? That's an immense amount of cash that isn't going into stocks. And he looked historically that the couple of weeks leading up to tax day has been weak for stocks. Secondly, a really interesting thing that I might do a dedicated video on or just research more is that he said that TINA and bonds are going to be really poor performers, which I've been saying for a while now too. So all those funds that are in bonds, like lots of money in bonds. And just remember, the bond market's bigger than the stock market. All that flow should go into other assets, other income producing assets, maybe real estate or stuff like that, but also should find their way into maybe value stocks and dividend paying stocks too, which will be more bazooka into the stock market. So he reiterated his bottom call in that we should rally into the back end of the year. I think that hasn't changed. So if you saw his cryptic tweet over the weekend, he clarified it on this quick CNBC clip that he is still bullish.
Tom, you share the same name with Tom Lee. Do you share his opinions?
I share a pseudonym. But yeah, Tom Lee, permabull, and a very smart guy. We're talking off the air how much I appreciate what he's doing. He's one of the good guys, as far as the good guys in the sense that he gets it right more often than he gets it wrong. I mean, nobody gets it right 100% of the time, right? But he's a smart dude, and he's been right a lot. The problem is that what we're looking at right now is a boiling hot economy, a really tight job market, and inflation that's pretty much running wild. And on top of that, we have geopolitics going crazy, supply chains getting fucked, China locked down, and it doesn't seem like there's a solution in sight for this runaway inflation. So we have this really crazy situation where the Fed is, in a way, trying to save the stock market and make Tom Lee's prediction come true by trying to land this shitstorm without crashing the market, without creating unemployment. When you raise interest rate, you create unemployment. So somehow they have to do opposite things, literally. So it's like trying to climb Mount Everest naked with a broomstick up your ass. Possible? Yes. Probable? Fuck no. So despite my love for Tom Lee, it just seems that we're in such dip shit right now with the market, inflation, supply chains, and all this craziness is going on. I just don't know. It just seems too shaky for me.
That's fair.
Justin, your thoughts?
I don't really have too much more to add. I mean, I just hope he's right. I'm very 50-50. I think we should dedicate another segment this week to just like catching up on if we think that the bottom is in, Tom.
So if you don't, if you kind of give away your time,
yes,
I'll take
Tom
it.
Can have
I'll
my
take
time.
it gladly. I'll take it gladly. So it's like, I always take gladly like the extra piece of cake, as you can see. I'll take the extra piece of time. Look, we can go back in history. And again, you know how much I like talking about Volcker. How Volcker in the 80s basically solved the massive inflation problem we saw coming out of the 70s. But people forget what was the cost of this. Volcker is kind of hailed as the hero. He made aggressive moves. He solved the problem, right? But people forget how bad it got when they enacted these insane interest rates of 20%, massive unemployment, double-digit unemployment, deep recessions. I mean, you can't have the cake and eat it too. We have Bullard out here talking about 3.5% already this year. Remember when we started with 0.25, 0.5 this year, maybe 1. So he's already talking about 3 and X that. So it's really tough to expect the Fed to do the impossible. I mean, with all my hate to the Fed, I mean, it's like saying, well, why don't you run fast as you're trying to run backwards and be at two places at the same time? It's just impossible.